Hello and welcome everyone to this morning's daily market report brought to you on behalf of CommunityFT for CommunityFT members. And what we're going to look at today is some major market movements to come over the next 24 hours. But before we do that, let us embrace at this point a quick risk warning. So if we can all familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you do make in your trading are of a fully informed nature. Okay, let's take a look at some economies, currencies and energies, or really then the well-being or value of economies represented by their currency. Let's also take a look then at crude oil. Okay, so there's some important economic data coming out today regarding the euro, and we'll have a look at that chart as well and talk about the same. Let's move to the platform now to inspect those two in order. So in front of us everyone, we're looking at the daily chart of euro dollar. As such, because of the currency pairs within this chart, or because of the currencies within this currency pair, we can get an indication of the strength of both of those. So today let's look at this from the point of view of the euro, okay? If the chart falls in value, that represents a strengthening of the dollar and weakening of the euro simultaneously. If it rises, it's the opposite, a strengthening of the euro and weakening of the dollar. Now we have a little bit of bullish movement over the last given couple of trading days, and effectively what this signals really, or can signal, okay, is some movement possibly to come, and we can draw in some support and resistance points to help us with that analysis, okay, and it seems to have broken above recent support. We could say that tenuous support from previous level, tenuous resistance I should say, hasn't been breached yet. So trades might not yet be actually taken if one is being, you could say shrewd, I guess, prudent, diligent, and waiting for confirmation. What we could use to help us with that though, okay, is the bearish volume in this particular chart over a 55-day period. The bearish volume, if it's particularly low, we can look to take short positions. And the Bollinger Band, this indicator that seems to be banding the chart, okay, anytime the price moves away from that indicator, we can look for certain positions therein, okay, such that when the price moves beyond or outside of that indicator, the positions themselves will be signaled as in a short for the bottom side indicator or a long for the upside. Of course, it's relatively inaccurate at most times, so we need a more solid strategy. And a more solid system is found by backtesting empirically and measuring a strategy one devises and then making adjustments based on the same. And if we're looking for a lot of confirmation here, we could wait until the chart breaches above the Bollinger Band, breaches a lot of the previous bearish minus columns, okay, or bearish plus columns I should say, and in that particular instance then possibly look for a movement. Let's look also at crude oil, okay? So this is the daily chart of crude oil. What's interesting is that crude oil closed with a doji yesterday. Today it seems to be showing a little bit of bearish volume, but it closed at a doji, okay? Or it was originally a doji today when it opened, okay? Now, in terms of gauging opportunities for this market, there are some indicators we can use to help us with that. The commodity channel index and 55-day exponential moving average were quite nice in conjunction with one another, such that when the price crosses the 55-day EMA, that can be a signal for an entry, and we can use the commodity channel index and whether or not it's range bound or having broken a range as confirmation of that fact. So in terms of looking at assuming if we had entered here with confirmation of the commodity channel index, an exit point, okay, may be presented upon retracement and hitting of the actual 55-day EMA as well, with the confirmation of the commodity channel index maybe moving back into a range, okay. But if we look at shorter intervals on this, and let's look at the 4-hour chart, there's some other interesting points prevail. So what we've just done is look at the Fibonacci retracement, okay? The Fibonacci retracement effectively is showing us here that actually let me just adjust that level to be more accurate, okay? It seems to be a case whereby we are, hold on a second everyone, let me just get this level here nice and key. It's as if we're in the middle, okay, of closing above the 23.6 level or tenuously testing that, okay, or tentatively testing that, let's say. And depending on whether or not the market does close above the 23.6 level, that could be a signal of the retracement and a bullish retracement therein, and an opportunity as such will prevail. But for the moment, okay, because of the indecision here in the market, A lot of traders will look for confirmation, perhaps by candlestick formation over the next couple of days, maybe looking for some double tops or some dojis as well to help us analyse further. So we hope this has been of help. If you have any further questions, do not hesitate to get in touch. We welcome all inquiries. We'll speak to you on Monday, and as we say here, have a great day.